This is Zach here with the US Chartbreakers here at Zach's Traders Cafe for Wednesday, the 30th of July. Starting off with the S&P, which is still, well, it's in a channel, which is there from back in April when everyone was fooled into thinking the market was going to collapse. Obviously, a strong rebound since then. A key reversal to the downside yesterday, though, and that could be the sign that was a little bit of weakness due. And the favored destination, even if we have a rebound afterwards be around 63.25, which is the floor of that rising trend channel from April. On the upside, still looking for the top of the channel there, now around the 6,600 level. Best case as we get there by the end of next month, while we remain above 63.25. We do break down, not expecting anything worse now than the initial July resistance around 62.80. Moving on to the Nasdaq 100 in this case, and here also a key reversal to the downside, which tends to be not a great thing, but at least while we're above the floor of the channel there from April around 22,900, still looking for 24,100 by the end of next month. But as you can see in recent weeks, the volatility has gone right down, and hopefully that means that it will remain relatively calm even if we have to test the floor of that channel. Moving on to the stocks and starting off with Expro. And here we've had a decent gap to the upside through the 200-day moving average rather. And the view at the moment is that the longer we stay above that 200-day line, around $11.20, we have our target there, 12.40, which is the initial target. Best case is up to $16, the upper parallel of that rising trend channel base by the end of next month. But obviously, it's normally the case that it takes one or two goes for a market or a stock to get through the 200-day line. It normally doesn't just go through there in one go. Moving along to a stock which I think I covered yesterday, GIBO, and here you can see that, well, if you look very closely, you can see that we've got this rising trend channel base, and the stock doing rather well in the wake of the coverage here. I suppose the top of the channel there looks to be around $22, and we're looking at that by the end of next month, while we're above the recent broken support there around $7.80. That support there from back on Friday. A stock which is new to us is HWH International, and here you can see that the shares actually hit the top of the notional top of that rising trend channel. In fact, probably that is a better fit of the price action. So heading for the $3.05 area, looking for an end of day close above the 200-day line at $2.11 to give us a retest of the $3 area, hopefully by the end of next month. Including that. Also ties in, the 200-day line also ties in with that May peak around the same $2 level. Next on the list is Moleculin, and here, hopefully a nice rebound for the stock here. It's bear trap line and reversal, so gapping down twice in June and then gapping up this month. We've held the top of the gap, which is the crucial part. Also held the top of that rising trend channel at $50, and at least while we're above that, looking for the top of the channel there as high as $1.37 rather, by the end of next month. But the key here, probably in the near term, is staying above that 50-day line, $64.65. Interesting setup at Newegg, in the sense that the shares have already delivered on the upside we were looking for, and it's just a matter of now seeing how much further they can push. We've got the top of the channel here at the moment around the $70 mark, looking for that by the end of next month, or hopefully much sooner than that, sort of reshaped bull flag, as I call it. And the longer we stay above the initial July resistance at $6, there'll be the chance to move to $71 or $72 over coming week. Has been above the neutral 50 levels since early June, which is impressive. Stock that keeps cropping up almost every day is Rich Sparkle, and here you can see from the chart, the daily chart, why we've got a rising trend channel there, top of the channel there for $52 for that by the end of next month, while we're above the recent broken resistance for the shares at $32.35. So hopefully we can see that kind of upside. 50 and 200-day lines rising, with obviously not much charting information or charting data to go for or to use at the moment. The next on the list is Scantech, and here we've got classic sort of basing type situation, gapping through recent neckline resistance around the 91 cents level, and above that looking for $2.50 by the end of next month. The at the moment, I suppose, also the way the 50-day line is also rising. It's even more exciting. The gap had. The situation at Shineco is next, and here you can see that we've got a broadening triangle base. We've broken resistance around the 19 or above it for best case scenario. Target as high as $39 by the end of next month. A nice bullish divergence there to the lower low that we had at the start of the week with higher RSI trades. So that is a good signal. Safe and green is next, and here got a strange setup in the sense that we are bumping along the bottom and trying to get some traction here. The pattern or the setup is that we've got a rising trend channel, top of the channel there up to $2.12, and we're looking for that by the next month, while we're above recent broken resistance around $1.10. So that is the setup there. On to the last two. The first one is coming up, if I can again type it in correctly. SuperX AI, and here beautiful breakout for the shares after that consolidation we had over the course of the spring going into this month. Current view is that we are at a rising trend channel, and that the top of the channel here is heading for the $20 area, hopefully by the end of next month or much sooner, the way things are going. Ideally, we stay above that old initial June peak, $14.42 on an end of day close basis, ahead of a move to $20. Last one is Salarius, and here had a bit of a spike, and interestingly enough, we come back into that rising trend channel base around the $135 level. That was the peak there, hoping that support will come in, by the $89-90 area, which was the initial July resistance, and if that does, then we could be on track for a retest of the 200-day line, and obviously yesterday's big peak for the shares. That's it for me today. More updates tomorrow.